Supermarket executives to be quizzed on allegations of profiteering by MPs on the Business Committee. Aston Martin Lagonda announces plans to invest £2 billion in the transition to electrification. Pressure on commercial property amid rising interest rates and the growth in hybrid working. And how artificial intelligence is being used to spot supply chain issues. Good morning, this is Ian King Live, an hour of business and economic news. Well, we're straight on to the business news in brief now, and the luxury car maker Aston Martin Lagonda said this morning it's expecting to invest £2 billion during the next 5 years as it invests in its long-term growth and the transition to electrification. It said this would comprise around £1.8 billion worth of capital expenditure and a further £200 million in technology access fees to its strategic suppliers and partners. These include Lucid, the US electric vehicle battery company, with which Aston Martin signed a strategic supply agreement yesterday. Lawrence Stroll, executive chairman of Aston Martin, also said the company was aiming to quadruple its profits during the next 5 years. The consumer goods group behind Imperial Leather Soap, Charles Worthington Hair Care and Carex Hand Gel said today that profits for the current financial year would be up on last year. PZ Cussons said this was despite higher costs and a hit to its revenues from the recent devaluation of the Nigerian naira. The Manchester-based company said adjusted pre-tax profits for the year to the end of May were likely to come in at least £70 million. That's up from £67 million during the previous 12 months and better than expected. The shares have risen by 4% this morning. And Wise, the parent of the money transfer service TransferWise, this morning credited a big rise in customers joining through word of mouth after it reported a surge in profits. The fintech company reported a pre-tax profit of £146.5 million for the year to the end of March. That was up from £46.9 million for the previous 12 months. Wise said it served 10 million customers during the year. That was up 34% on the previous 12 months. But it warned that it expects growth to slow during the current financial year. Well, shares of Wise surged by more than 15% on the open. The water industry regulator Ofwat this morning gave the green light to 33 infrastructure schemes worth £2.2 billion that are being accelerated in order to tackle problems such as storm overflows and river water quality. Ofwat approved 10 schemes worth close to £1.7 billion to tackle storm overflows to be completed during the next 2 years. It said these included work to improve water quality at the bathing water site at Ilkley on the River Wharfe and significantly reduce spills into Lake Windermere. It's also approved 7 smart metering schemes, including the installation of 462,000 smart meters that it said would help to increase drought resilience. Ofwat said the total potential costs of the accelerated project had increased from £1.6 billion to £2.2 billion, mainly because of United Utilities schemes to accelerate storm overflow improvements. Well, we're going to break into the business news now briefly to cross live to the COVID inquiry, where the former Health Secretary Matt Hancock is giving evidence. We're going to listen in for a short while here.
The morning's evidence session. You have kindly provided a witness statement dated the 20th of April of this year, is that right?
That's right, yes.
Could we have, please, on the screen, 181825? And page 14, please. Page 24, I think, is the last page. Signed, I think, on the 12th of May, therefore, and it was accompanied by the usual statement of truth. Mr. Hancock, you were Paymaster General and Minister for the Cabinet Office between the 11th of May 2015 and July 16.
Yes.
And during that time, were you therefore responsible ministerially for an important part of this pandemic preparedness structure, namely the National Security Risk Assessment process?
Yes, I was formally the junior minister responsible for that, both for the secret part and for the National Risk Register. I reported to Oliver Letwin, and he, in practice, led on those areas, but nevertheless, I had junior oversight of them.
And is that because the senior minister in that regard is the Chancellor of the Duchy of Lancaster, which he was, and you were the junior ministerial colleague as Minister for the Cabinet Office?
I was effectively the number 2 in the Cabinet Office, yes.
And then, did you become Secretary of State at the Department of Health and Social Care between the 9th of July 2018, when you took over from Jeremy Hunt MP, and the 26th of June 2021, when you resigned?
Yes.
Milady, for the purposes for those who may be listening to Mr. Hancock's evidence, I'm going to make clear that your appearance today is obviously concerned with the discharge of your functions as the Minister for the Cabinet Office and as Secretary of State in the Department of Health and Social Care pre-pandemic.
Yes.
We are concerned today only with the issues of emergency planning and preparedness. And so, may I make clear that I will not be asking you questions about the detail of non-pharmaceutical interventions, lockdowns, the government's response, or the test and trace or procurement or PPE issues which arose after the pandemic struck. May I then...
They will come in later modules, just so
They-
you understand.
They will all be in later modules, particularly module 2 in the autumn, for which Mr. Hancock has already provided a draft statement. EPRR pandemic planning. The functions of the Secretary of State, Mr. Hancock, in relation to pandemic planning are wide-ranging and complex, are they not? There is quite a lot to be concerned with in this field.
Yes, and that is in addition to the very broad responsibilities overall as Secretary of State.
You are responsible, or were responsible, in broad terms for health and social care, and that includes, therefore, health protection, health improvement, the healthcare systems, the social care systems, although that's largely in the hands of the local authorities, and most importantly, perhaps, the NHS. So it's a very wide brief indeed.
I wouldn't say most importantly the NHS. I'd say that there are many, many areas of importance, and actually one of the challenges of the job is to try to put your attention to the most important areas because it is so broad.
Is a vital function of the Secretary of State to deal with health emergencies?
Absolutely. And going into the job, I had some experience at a more junior level of dealing with crises and emergencies, and so I took my responsibilities as the principal responder to a pandemic very seriously.
Does dealing with health emergencies include dealing with infectious diseases? Being ready to deal with the risk of infectious diseases?
Absolutely.
So, when concerned in the field of emergency preparedness, resilience, civil contingencies, where there is a health emergency, it is the Department of Health and Social Care that is the lead government department. In effect, it is the department in the driving seat.
Yes, and as Secretary of State, I felt keenly the responsibility as essentially the lead responder in the first instance to those sorts of health emergencies, and it was a part of my day-to-day work because these emergencies happen from time to time.
Were, when you were Secretary of State, risks prioritised in any way? Was there a grading system to prioritise those most important and serious risks from those that were less so?
Yes, of course, that's absolutely vital. And one of the challenges in a system as big as the health system is making sure the decisions are taken at the right level, because if you escalated everything to the Secretary of State, whoever they are, they would be completely overwhelmed. Yet it's vital to escalate the things that need to be seen by the Secretary of State to their desk.
Was influenza pandemic prioritised as a Tier 1 risk?
Yes, it was. I recall that on my first day, I was given a briefing document about as big as this one, and one of the elements of it was making clear my responsibility as the Tier 1 national responder for a pandemic flu and for other infectious diseases. I was already aware of this element of the role from my time at the Cabinet Office, but nevertheless it was properly and formally brought to my attention. And on day one, I asked for more information on preparedness because having been involved in previous crises, for instance, at the Bank of England, before I went into politics, I knew that when things go wrong, things move quickly, and you need to be as well prepared as you can.
At the highest level of the department, was there a board known as the Departmental Board, which looked at the highest level on the major risks confronting the department?
Yes, and the role of the Departmental Board was to ensure that the department was structuring itself properly to deal with the different challenges that it faced.
May we have, please, 23142, which is a copy of your department's then high-level risk register for Q3 2019 to 20. If you can go to the top of the page, we will see there the years 2019-20, Q3, high-level risk register. And if you go to the far left-hand side of the page, there will be a number of row numbers. If you could scroll down, please, to row 11. There are two names in the left, in the column second from the left, Mr. Hancock, Emma Reid and Clara Swinson, both of whom have been witnesses before this inquiry. The description, major national infectious disease outbreak and pandemic flu, and the risk identified for self-evident reasons is that the department fails to respond and mobilise adequately to a major national infectious disease hazard, such as pandemic flu or other novel infection. And the approach taken, the response on the part of the department, is in the next column, to manage the risk and likely domestic impact of a major pandemic flu or emerging infectious disease outbreak. So the risk was identified in terms not just of the pandemic being an influenza pandemic, but obviously the risk of an infectious disease outbreak, an emerging infectious disease outbreak.
Yes.
Does its presence in that chart, in that schedule, Mr. Hancock, indicate the seriousness with which the department took the risk of a major infectious disease outbreak or pandemic flu?
Yes, and the red rating demonstrates that the significance of the impact of this, should it strike, could be very serious. And the day-to-day life of a health secretary involves being aware of and from time to time being involved in managing the response to potential infectious disease risks, which happen from time to time. And I set out in my statement that over the autumn of 2019, there was a potential flu outbreak. There was a what's now known as Mpox outbreak, then known as monkeypox. And over this period, we were also dealing with the Ebola epidemic in Western Central Africa, and the particular responsibility of the health department was to ensure that we were prepared should Ebola come to the UK. So this was not a theoretical exercise. It was part of the day-to-day job of being health secretary.
It is apparent from the document that in relation to each risk identified on the left of the schedule, a number of what's known as mitigations are put in place in order to manage the risk. In other words, the department sets out in columns K, L, M and N in respect of each risk, what the department is doing to manage the risk, to mitigate it, to ensure either that the risk does not eventuate, it does not come to pass, or to manage the consequences of whatever it is that the risk amounts to. The consequences can be managed. Do you happen to know why, in this risk register, there is no mitigation set out?
Well, we're going to leave the COVID inquiry there for the time being. If you want to continue to watch Matt Hancock, the former Health Secretary, giving evidence, you can scan the QR code on screen right now, and that will take you to the live stream. Now, executives from what used to be called the Big Four supermarkets are being quizzed by MPs this morning over whether they're doing enough to get to grips with food price inflation. Representatives from Tesco, Sainsbury's, Asda and Morrisons are facing MPs on the cross-party Business and Trade Committee amid allegations of profiteering, which are strongly denied by the industry. Well, also facing questions will be the Groceries Code adjudicator, Mark White. The hearing comes in the wake of figures last week, which revealed that grocery price inflation last month stood at 18.4%, down from 19.1% on the previous month. We're going to have a listen into that hearing now.
The last couple of years, and if you do the maths, I guess, between what we sold and what we made, it's a significant investment in our customer offer, as well as our colleagues, which we're really quite proud of, actually.
I'm sorry to cut in, but the public will just look at the numbers I've presented to you, and your group profits have gone up from before the COVID pandemic to now, from 1.6 billion to 2.03 billion. That's a bigger number. I'm sure there are lots of reasons underneath it, but essentially you've got more cash in the bank at the end of the day based on your reported accounts. And so the question is, why, given the COVID pandemic, the energy crisis, the increase in cost for your supply, the increased cost to your customers, how can it be possible that you're making hundreds of millions of pounds in additional profit?
I would reiterate the point, Mr. Chairman. I'm looking at the numbers. Our adjusted operating profit for the group in 2019 were 2.6, and in 2023 they're 2.6 again. So there may be, I don't know, maybe some discrepancies in what we're comparing, but
I need to move on, but just so you know, for the record, this is the Tesco PLC annual report and financial statements from 2018 to 2019, where a chap called Alan Stewart, who is your Chief Financial Officer, reported a group statutory profit before tax of £1.6 billion. And then when I turn to the same report from 2022, it's a different chap this time, but he reports on the same measure, £2.03 billion. So I'm just reading the numbers from your accounts.
I'm referring to our latest issued accounts for 2022-23, so that may be the discrepancy. I'm happy to, I guess, compare notes.
Thank you. Mr. Comerford, from the perspective at Asda, are you doing enough to help your customers right now?
So in a similar way to what we've just discussed, so if you looked at the Asda full year 2022, to account sales were flat on a year-on-year basis, but profit at the adjusted EBITDA perspective was down by 25%. So that reflects what we've been trying to do to manage the inflation that we've been seeing. We all know the drivers that we've seen of inflation in the UK market, whether that's from some of the supply chain issues through the pandemic, whether the weak pound, the labour market costs, the war in Ukraine certainly affecting food and energy prices out there. We've done a series of customer-facing initiatives with a launch of Just Essentials, which is our entry price range in all of our stores. We have done a dropped and locked campaign where not only we've dropped the prices of products, we've also held them for a period of time. We've launched a rewards programme and a loyalty programme, so the more that you shop at Asda, the more you get rewarded for that, as well as investing in some of the key food offers out there. And in our cafes, we offer kids the chance to eat for £1. As a lot of my competitive set have also done, we've also invested in our colleagues as well with a series of pay increases, which has been necessary as we faced into this cost of living crisis.
Thank you. And the ASDA accounts are quite difficult to read because you've had a significant change in the way that your business is owned and financed. One of the things I've noticed is that your cost of borrowing has gone from, in 2018-2019, from £66 million to the year 21-22 to nearly £500 million. Why have your debt payments had to go up so significantly, and what does that mean for your customers?
So as you say, we've had an ownership change during that time period, and therefore, as a consequence, the way we are owned and are structured is different. So as you were comparing 3 years prior to that. All I would say is, therefore, that bit has then been factored in as we've looked to our business and our accounts, and therefore, despite that, as what you're talking to in terms of the financial structure, we're still investing in the customer offer. That's why we have invested in Just Essentials, as rewards, dropped and lock programmes, as well as cafes for our customers.
Rhiann Bartlett, coming to you next from a Sainsbury's perspective. Again, the same question. I've just looked at the annual accounts. 2018-19, there was profit before tax of £239 million. 21-22, £854 million. There's been a significant increase in profit at Sainsbury's. Are you doing enough to help your customers?
So the first thing we would like to say is we're acutely aware of the impact of the cost of living crisis on our customers and also on our colleagues, and how difficult that they're all finding it right now. We've spent £560 million on keeping prices low, battling inflation, and we're doing absolutely everything we can to keep prices as low for customers as possible. Like Tesco and Asda, we have a range of price mechanics and activations that we choose to invest in to help our customers. So we also have an Aldi price match offer. We have about 300 products in that. They're the products our customers buy the most frequently. We've been very choiceful about making sure that that's covering a set of products that are in their baskets week in, week out. We also have Price Lock and we have loyalty pricing. And in addition to that, we have an economy range called Stamford Street, and we've just brought all of our lowest priced products under one brand so that they're really easy to find. In terms of the accounts that you reference, actually our most recent year that we've just published, we made 690 million. So our input costs are not being fully passed through to our shelf prices. We've submitted lots of detail on that to the CMA. We've had very good discussions and dialogue with the CMA. But we are inflating behind our input costs, and we're inflating wherever possible behind the market.
Thank you. And David Potts from Morrison's, I suppose the saving grace is your profit's gone down, not up, from 2018-19 compared to 21-22. So I can't quite put the same question to you that you're running away with excess profits. But what are you doing to help your customers with the cost of living crisis?
Thank you, Chair, and thank you for the opportunity to be here today. I think it's a privilege for Morrison's, and I'm very pleased to be here in person myself. I think we are acutely aware of the pressure that many millions of ordinary people have come under as a result of this cost of living crisis and food inflation. In particular, I know that since it started, we have donated 4 million to food banks to make sure no one is left behind. In that same period, we've helped our customers by collecting the goods they want to donate to food banks and delivering them there ourselves, a further 8 million, and that does come on top of the 12 million that I know members of the Select Committee will be aware. We donated from the company during the pandemic to food banks. I think as far as what have we done this year, well, so far I reported on Thursday our profits were down 10% half year one as we faced into lower prices. By investing early in lower prices, we are as close now as this company has ever been to Aldi and Lidl prices. And my, I think, final remark would be we have introduced a brand called Savers, which, according to Kantar last week, who comment on the industry on various matters, is the fastest growing sort of fighter brand, the budget brand in the UK this year. And I believe that's because we've lowered prices with a tougher policy for us to get through with those prices of Savers. We've made delivery more attractive, and we've increased the item count to 240 for that items, and we've put them where people can see them and buy them. And so I think it's a very fair question, and there's more we can do, but I'm very confident that so far we're getting at every cost we can in order to put it into prices.
Thank you. And then just very lastly from me, all of you are very large employers.
So that's the Business and Industry Trade Select Committee there discussing food price inflation with representatives of the big four supermarkets. Very interesting to note there that Morrisons has sent along its chief executive, David Potts, whereas Asda, Sainsbury's and Tesco all sent along their chief commercial officers. So Morrisons sending along a more senior official there. And as you just heard, David Potts from Morrisons telling the committee his profits were down before tax, were down by some 10% last year as it seeks to cut prices. We will have more on that throughout the morning here on Sky News. Well, last night's sell-off on Wall Street was followed by mixed trading overnight for equities in the Asia-Pacific region. Hong Kong climbed by more than 2% after 5 days of losses. Meanwhile, there were gains for Shanghai, Sydney, Singapore and in Mumbai. Tokyo, the only major market in the region to finish in negative territory. Sentiment's been boosted in the region by a speech by China's Premier Li Qiang at the Summer Davos event in Tianjin, in which he said China's economic growth in the second quarter will be higher than in the first quarter of this year and is expected to reach the annual economic growth target of around 5%. Well, in Europe, stocks have been largely in positive territory this morning. Actually, looking at that, they're a bit more mixed now. The CAC 40 just dipping into negative territory, as is the DAX in Germany, the IBEX in Madrid and the MIB in Milan, both in positive territory right now. Talking points in continental Europe this morning include the Italian yacht maker Ferrati. It's traded to a 4% premium after making its stock market debut in Milan, and it's achieved a valuation of €1 billion. Well, here in London, the FTSE 100 is in negative territory. It's more or less unchanged. Look, that's off just 2 points right now. There have been gains for the financial stocks and the mining heavyweights. Among leading gainers are stocks with exposure to Hong Kong and China, following that speech from Li Qiang. Among others in positive territory in the FTSE right now are Prudential, Standard Chartered and Continental Hotels Group. To the downside, well, JD Sports is leading blue chip fallers right now, currently off by more than 5%. And that is following a warning that it's seen some softening in trade in its North American business in June. Outside the FTSE 100, the oilfield services group Petrofac is off 1%. It was off more than 3.5% earlier on. That's after it warned of lower first half revenue in its largest unit. But the utility warehouse owner Telecom Plus, look at that, the share's up nearly 10% on better than expected results. We're going to have them on the programme this morning, actually, but they cried off last night, I'm sorry to say. Well, foreign exchange markets. Sterling currently more or less unchanged right now against the US dollar. It's off by around 1/7% or so against the euro. The single currency, meanwhile, up nearly 1/5% right now against the dollar. As for the oil price, well, that's a little firmer this morning. That is amid concern over Russian supply. That continues to trump demand over concerns over demand. But as you can see, it's actually dipped back into negative territory right now. A barrel of Brent crude will currently set you back $73.62 a barrel. That's off 0.75%. Well, joining me now is Roger Lee. He's head of UK equity strategy at Investec. Roger, good to see you this morning. What do you make of what's going on in the oil price in particular right now?
Oh, good morning, and thank you for having me back on your show. I think the oil price is caught in a bit of a two-way pull at the moment. On the one hand, you have clearly some still sort of recessionary concerns, particularly out in the US, which we think are probably pretty much unfounded. But so you've got some recessionary concerns in the US in terms of growth and global demand. And then, on the other hand, you've clearly got a more forceful OPEC that is perhaps particularly a more forceful Saudi Arabia that seems to be at the moment providing a fairly clear backstop whenever the oil price falls below $70. So a bit of a two-way pull on oil. I think if you start to see some of these recessionary concerns fall in the US, if you start to see growth returning in China, then arguably you'll start to see a bit more support for the oil market going forward.
Roger, big call from you there. You've just said you're fairly confident that you think the US will avoid recession. Why do you say that? Is it the strength in the labour market, the fact that the US is still creating so many jobs?
Yeah, I think so. I think it's more that perhaps the risk that the US won't go into recession. I think it's the risk rather than a definitive call that they won't. But the risk that they won't go into recession is definitely one of the biggest risks facing markets. And as you say, I mean, that's really driven by the strength of the labour market has been so persistently strong over the last few months. The idea that interest rates are peaking in the US, the market is pretty convinced that there's going to be one more rate rise and that's it from the Fed. So the idea of a policy-induced recession starts to recede. And still the consumer seems in reasonably good shape in terms of accumulated savings. So it's a combination of issues, a combination of reasons that perhaps suggest that the US is less likely to go into recession than the market is anticipating. And that's the key, I think, going forward.
How is that having a bearing on your stock selection right now, Roger?
Well, I think it's having a profound effect because certainly you can do a compare and contrast with the UK, and all of the above perhaps are reversing in the UK. I think the risk of a policy-induced recession has clearly gone up from last week. That's what the market's implying. That's what the yield inversion is implying. Unemployment might be in danger of ticking up in the UK. And the consumer is coming under a lot more pressure in the UK because of pricing, as you've just been discussing on your programme. So I think quite a lot of the mirror image of the UK is reflected in the US. So to answer your question, so what I think we're looking for is companies in the UK that are very much internationally exposed and perhaps being more cautious on some of the domestic stocks.
All right, Roger, we've got to leave it there, I'm afraid. Good to see you this morning. Thank you.
Thank you.
Still to come here on Ian King Live, how robotics are helping businesses identify supply chain issues. Don't go away. Welcome back. Well, as we were discussing a while ago, supermarket chiefs are being quizzed by the Business Select Committee this morning on when we might see falls in the cost of food and fuel. Our business correspondent Paul Kelso has been watching proceedings. Paul, what have you made of it so far?
Well, we're hearing, Ian, what are familiar arguments and arguments that have been made on this programme before by the big players in the food retail industry. We've got Asda, Morrisons, Sainsbury's and Tesco's, of course, in front of the Select Committee this morning. Notable that only Morrisons has seen fit to send along the Chief Executive. Dave Potts described it as a privilege to be there. The others are relying on Chief Financial Officers and the like. And they've faced a pretty consistent line of questioning thus far, which is, are you doing enough to protect customers and to avoid making excess profits, as they have been characterised, and the chair of the committee pointing out that 3 of those 4 have made bigger profits in the last year than previously. Pretty familiar arguments from all of them that they are doing what they can to squeeze prices. They describe it as a very, very competitive sector. Tesco point out they are matching, as we know, with Aldi. 700 lines, they say, are matched to the discounters there, setting the price, if you like. Morrisons, Dave Potts saying, they're as close as they've ever been to Aldi and Lidl in price. They all say they're investing in what they offer customers, and they all say they're facing the same kind of pressures, including on wages, costs and the inflationary pressures we've seen across the board. I'm at Watkins. This is an international food wholesaler. They supply many of the supermarkets who are in front of the Select Committee today with foods from around the world. And talking to the boss here, they, of course, facing those same inflationary pressures since COVID. Interruptions to supply chains. Freight costs have gone up. Fuel costs have gone up. Seen an increase in the minimum wage. So the suppliers are being squeezed. Their margins here are tighter. Of course, the supermarkets have a huge amount of buying power, so it may be difficult for those increased costs here to be passed on to the supermarkets. The question is, how does that end up when the customer gets to the till? Today, the British Retail Consortium, which represents these supermarkets and others, have said that food inflation is coming down. They actually said shoppers would welcome it across the country. Well, it's come down, food inflation, to about 15%. That's not really a great deal to celebrate. Prices still rising, just not quite as horrendously fast as they have been in the last few months.
OK, thanks, Paul. Now, a few workplaces have felt the impact of post-pandemic labour shortages more acutely than supply chains, with truckers, forklift truck drivers and other warehouse operatives all in short supply. Well, that's created demand for companies like Dexori, a robotics firm whose platform can complete scans of up to 15,000 pallets and parcels an hour, making it easier for businesses to identify supply chain issues. Well, today it raised $19 million in a Series A funding round led by the European venture capital firm Atomico and including Maersk Growth, the investment arm of the global logistics and container shipping giant Maersk. Joining me now is Andrei Dănescu, Chief Executive of Dexori. Andrei, good to see you this morning. What is this money going to enable you to do?
Great to be here, Ian. It's designed for growth. So we're experiencing a huge amount of demand. It's global demand based on the challenges the industry is facing that you mentioned earlier. So with this capital, we're going to be able to expand the team and to expand our technology to other markets like wider European coverage, the US and the Asian markets.
Obviously, you have a very close relationship with the likes of Maersk, who've invested in you today. But what about the warehouse operators themselves? Could you see a time when your technology will be offered as a standard service by the warehouse operators?
Certainly hope so. We have a lot of customers very, very interested in this. And it trickles down all the way to people working on the warehouse floor. Like you mentioned, there's a shortage of labor, and the technology that enables better use of people's time is always going to be embraced very, very quickly by the industry. And that's exactly what we're offering. We're offering that level of data and optimization to know exactly where any product, any pallet, any parcel is in the warehouse at any point in time.
Now, obviously, you're providing a view of inventory and supplies within warehouses. Can you see yourself expanding the service in future? What sort of things might you do in the future?
So that's an interesting question. I think the inventory part is the entry point for us, and it's a relatively small part of what we do. Our digital twin technology allows us to recreate the warehouse, and not just one but entire warehouse estates. So if you are a global player, you're going to be able to deploy this technology and see anything and any information from any warehouse that you have, pretty much from anywhere in the world. So what we're going to be expanding into is detailed analytics of every single cube in a warehouse. So you'll know exactly how to best utilize the racking system, how to make use of that warehouse to 100% efficiency, but also how to expand into optimizing the warehouse. Of course, we're acquiring large amounts of data about the operational performance of the racking system, of the way the pallets are stored, the way the space is utilized. So the AI technology we will be bringing into the market, it's going to enable to optimize this without any kind of disruption to the current operations. That's what we're looking at expanding into the future.
Where are the robots built?
So we're a UK-based company. So we design and manufacture our technology in the UK. So we have two sites. One is based, our main office in London, and the manufacturing site in Oxfordshire. Apart from Maersk, who I mentioned there, you do have some existing, quite interesting shareholders on board, including Martin Bish and Paul Dodd of Habu. Is that quite a close relationship for you? Yeah, we've been working very closely with Martin and Paul from Habu. They're a little bit more advanced in terms of their company stage than we are, but we're pushing to really bring this transformative technology into the market and make the logistics industry operate better and faster. What's the competitor landscape like? Are there other businesses out there doing this sort of thing? That's again an interesting question, because you can make the argument that the biggest competitor we have is pretty much pen and paper. Is people actually having to take inventory manually, having to add extra tasks at the end of a very long shift, trying to make kind of do their best in bringing this information for their customers. There are people trying to use other technologies to do this. But what I will say is being able to scan entire racks and being able to deliver this level of performance is not something that any other technology in the market can get close to, especially at the level of data information and data richness that we can bring. And tell me about the origins of the business. When did you realize that there was a market for this? So for us, the logistics market pretty much came to us. Basically, we had an autonomous robot, and we had this technology. We were working with a number of retail customers. So we were looking at deploying this technology inside the stores to be able to create this digital twin of a store and provide real-time information. With COVID, that's where it was a pivotal point for the company, because a lot of the customers moved their operations online. So they came to us saying, hey, we're really trying to get more data and more insights from our warehouses. Is there a way to use autonomous robots and the digital twin platform you guys have to bring this level of information? So COVID was a big opportunity, because for the logistics industry, it brought a lot of interest from a lot of players. But it also was a massive challenge, because we all know the limitations that were present, and it was very difficult to find labor. It was very difficult to work in those conditions. So it was one of the transformational points for us. So we've been exploring the logistics space for, I would say, 3 years now. We've been working on the technology for over 7 years. But in the recent times, is basically the Dexo Review platform has been launched in February this year. And that's where it really took off, because people realized the amount of information and the speed at which we can return this data. And it really, really propelled us to a completely new level. OK, Andre, we have to leave it there. Good to talk to you this morning. Thank you. Thank you. Now, the commercial property sector has plenty on its plate just now. Quite apart from rising interest rates in the US, UK and Eurozone, the rise of hybrid working is posing questions about future demand for office space, while landlords are also under pressure from both tenants and regulators to reduce the carbon footprint of their buildings. I've been speaking to Sue Asprey-Price. She's Chief Executive of JLL Work Dynamics for Europe, the Middle East and Africa.
What we're seeing, Ian, is what I would call a hybrid balance, where we're seeing that a lot of organizations do want their employees back into the office, but they also recognize that employee flexibility is key to attract talent. So we're seeing a real mix of, a number of days per week they'd like to see people in the office, but more so that as well that they do see some working from home as part of that mix. So hybrid balance is what I would call it.
Which employers are doing the best job in enticing people back into the office?
Well, we're seeing a range from really kind of suggesting that people are back in the office, so a bit more of a mandate, all the way through to tech organizations that right now are suggesting a few days to come back in. However, organizations know that they're competing with the home, so they're investing in the experience people have when they come to the office. So they're doing a great job of creating the right environment, the right type of space, and having the right amenities. Things like really good coffee is important.
We've learned that HSBC are probably going to be abandoning their home in Canary Wharf of the last 20 years for smaller facilities here in the city. Would you expect to see more announcements of that kind?
I think that's exactly what we're seeing play out, Ian, is that, you know, the flight to quality is one of the themes that absolutely is applied to our industry right now. The move of HSBC is a very good indication of right sizing, where they have the right footprint to really accommodate that hybrid model. But also another big reason for that was the draw to sustainability. So sustainability is very prominent in our sector right now. Having a sustainable, high quality office that's the right size footprint is what most organizations are focused on right now.
Absolutely. That shift to net zero, though, comes at a big cost for commercial landlords.
It does, it is, and it's, I think, the opportunity and yet the challenge of the century for us, really, because it is looking at how do we retrofit buildings so that they can really achieve those sustainable aims. The great opportunity of it, though, is that it's everybody's agenda. So whether you're an investor, a developer, a landlord, or an occupier, everybody has net zero carbon aims, and never before in our industry have we had such an aligned interest. So how we achieve it is a collective aim, which is a great opportunity for us.
Is this pressure coming chiefly from tenants themselves, or is it a mix of tenant demand and regulation, or in some cases the instincts of the landlords themselves?
It's a little bit of all of the above, actually, and so definitely regulatory pressures, but good pressure to be having around the sustainable aims. But definitely occupiers, their employees are pushing them. They're saying, we only want to work for a company that has sustainable aims aligned with my own interest. So it's coming from all different sides, and what I'll say again is that it's an aligned interest, so it's not going away.
Now, the City of London Corporation is apparently looking to fast-track applications to convert old office space into other uses. Is that a good idea?
I think yes. You know, certainly there will be some assets that will really struggle to meet those sustainable goals of an office building. So looking at alternative uses, we do know that London is still a fantastic location for tourism, and there's been some great announcements around office buildings being converted to hotels as an example, which is exactly what the City of London needs.
How much is this shift to net zero going to cost the commercial property sector in total here in the UK?
It is a significant bill, but what I would say again is that it's a long-term investment, and you know there's not a lot of the current office supply that meets the net zero carbon objectives. I would also say that new technologies that are coming out are driving some of that cost down. A lot of the cost is around energy and how energy is consumed. So again, we're really hopeful that technology and the new technology coming out is going to really help play out with that expensive cost to fit it out.
That was Sue Asprey-Price from JLL. Well, still to come here on Ian King Live. Have you seen what's in the morning newspapers today? I have. I'll be telling you what's next in them.
I'm Hannah Thomas-Peter, and I'm Sky's climate change correspondent. The UK is a world leader in wind power. Power! Power! People! It's part of the Congo Basin rainforest, which is such an important ecosystem. It's known as the lungs of Africa. We aim to be the best and most trusted place for news. She doesn't really enjoy speaking to the press, and it wasn't clear right up until the last moment that she was going to sit down with me.
I might be just very naive, but I do believe that change is possible, otherwise we wouldn't be climate activists.
I'm confident for the last 30 years we have known how bad it is. I'm not here to apologize. I'm here to fight for the next step.
You can see just the piles and piles of stuff, these sofas and people's desks and children's books. And you can see inside this home here, people trying to sort out their home. It's just been devastating.
I think everything's at stake. The future of our planet, the future of the beauty around us, the future of you and me.
Slightly minutes, slight better. Fly Emirates, fly better.
Welcome back. Time for a look now at this morning's business pages. And the Financial Times splashes its print edition with the latest developments from Moscow, but it also reports on its business front page that a biotech company backed by the Chinese conglomerate Fosun Group and the private equity giant Warburg Pincus has begun one of the first mid-stage human trials of a drug discovered and designed by artificial intelligence. It reports that in silico medicine, which was founded by the Latvian-born scientist Alex Avoranikov, has dosed a patient in China with a novel therapy to treat the chronic lung disease, idiopathic pulmonary fibrosis. Well, the Times leads its business pages with a report that 4 in 10 of all fines issued by HM Revenue Customs for late filing of tax returns are handed to people who own too little to owe any tax in the first place. It says that between 2018 and 2022, 420,000 late filing penalties issued by the tax authority were to people who earned less than the personal tax allowance and therefore owed no tax. The paper also reports on its business front page that Cornith Lithium, the start-up hoping to mine the metal from a disused China clay mine near St Austell, has warned that its future may be in doubt if it's unable to raise £10 million by the end of next month. Meanwhile, the Daily Telegraph leads its business pages with criticism yesterday from Jeremy Hunt, the Chancellor for the Bank of England's economic forecasting. It says that after months of refusing to comment on the bank's mistakes in the face of criticism from economists and Tory MPs, the Chancellor said yesterday its modelling needed to improve. The Telegraph also reports on its business front that Dubai has defied a global downturn in the fortunes of the super-rich after becoming a haven for Russian money. Assets under management in the UAE hit $500 billion last year, thanks mainly to a rush of Russian assets into the Gulf states. Well, joining me this morning is Jürgen Meyer. He's former chief executive of Siemens UK and vice chair of the Northern Powerhouse Partnership. Jürgen, good to see you this morning. Let's start with the Times. You picked out the story there. Germany struggling to beat recession.
Yes, and I mean, it's not good economic news, I'm afraid. So Germany's main economic indicator going south. Now, some in the UK will look at this, I guess, with some schadenfreude, as we say. But really, this should worry all of us because Germany is such a big engine of the economy, particularly manufacturing and exports, that what it does show is it shows, of course, a slowdown in the global economy. You were covering earlier in your programme about the USA economy, not being particularly strong, the China economy not recovering at the rate that people hoped, and also Germany, like all countries, not going as fast as is needed on the transition from petrol and diesel vehicles to electric vehicles. And look, these are trends that affect us in the UK also. So I suspect that this is not good news for economies across Europe, including the UK.
Yes, indeed. Now, you've also picked a story in the Telegraph here. Britain's incompetent net zero elites. You better explain that.
Yes, well, I picked this article out because it really needs some balance. So, the title being, as you say, that, those who are arguing for a faster journey towards net zero are somehow incompetent. So calling me incompetent, I guess. And the article pointing to two things. One saying that the technology is not yet ready to deploy. And the second thing, that consumers are going to be left with inferior technology. Well, look, I would strongly argue that both are wrong. Saying that solar and wind power is not ready. Well, how could that be the case when 40% of UK's power is now produced by both of those technologies? But look, the real thing wrong with this article is that it offers no alternative at all. So therefore, I'm assuming the writer of this is just totally ignoring climate change and wants us to continue to accelerate our climate emergency. So sorry to have to disagree with this. It really needed some serious balance.
Briefly, Jürgen, is there a case for saying that maybe we are going too quickly?
No, I mean, I don't think we're going quickly enough, when it goes to the transition, for example, in our homes from our gas boilers. We in the UK are doing nowhere near enough to get people off those technologies and onto heat pumps or solar schemes. And other countries like Germany, particularly Scandinavian countries, are doing that way faster than we are. And ultimately, it will reduce people's energy bills, not increase them.
OK, Jürgen, got to leave it there. Always good to see you. Thanks for joining me today.
Thank you.
That's it from me. I'm back on Thursday, actually. I'm at the cricket tomorrow. Emma Crosby will be sitting in. Do join her. Up next is Jane Secker with the latest from the COVID inquiry. Thanks for joining me today. Cheerio.